everybody, Colin here. Hope that you're having a fantastic day. And I wanted to just start to share some of the wealth and knowledge that I've been learning in the program that I'm involved in with regards to Forex trading. It's called iMarkets Live. And I didn't know very much about Forex over the last couple of years. I've always known that it has incredible potential, but it's different when you don't have mentorship, when you don't have somebody to properly teach you. And so this is just part of the incredible education and training that I've been getting in iMarkets Live. And I just wanted to share this with you, right? Starting with some of the absolute basics. And one of those things is, what is a PIP, right? A PIP. What is a PIP when we're talking about this whole thing with trading currencies and investing in currencies? Here's a very simple way to understand it. A PIP is a unit of financial measurement. What does that mean? A PIP is money, okay? But it's just money broken down to a much finer degree than what we humans generally can see. So let me explain what I mean. When we are trading money hand to hand, or we're writing a check, or we're making a payment, or we're collecting payment, we only use up to 2 decimal places, okay? So in other words, 1.01, $1.01, okay? 0.01, that's 2 decimal places. So as a matter of fact, if you take a look right here, let me just move this arrow. If you go right here, let's look at an example of a price that makes sense to us, right? 65.01. Okay, that means $65.01. That 2 decimal places, the 0.01, that is what makes sense to us, because in terms of what we can see, our money isn't broken any further down than that. It goes down to 1 cent. That's the lowest you can go. However, when you're talking about digital currency, it can be broken down even further beyond what the human eye can see. And of course, computers can track it very easily. So a PIP still represents money. It's just that it goes further down than even 1 cent. It goes to 1/10 of a cent, 100th of a cent, in some cases even 1,000th of a cent. Okay, so that's what a PIP is. It is still money. It's just a unit of financial measurement that's usually a lot smaller than what we currently trade with ourselves over the counter, right? So let me give you a very simple example here. We're looking at currency pair Euro, Great Britain, Pound. And as you can see right here, I'm just looking at this chart. And at this point, it took it made a huge run. And the value of, in terms of the euro, so let's see where this makes sense. In other words, at this point, for 1 euro, 1 euro will get you 0.90417 Great Britain pounds. Okay, it's pound sterling. So the way that we human beings would read that would be, hey, you know what? 1 euro is going to get you 90 cents. Okay, 90 cents sterling. Okay, 1 euro gets you 90 cents. However, you can see that the absolute value of it actually goes a little bit finer. It goes actually 90.90, which is 90 cents, 417 is broken down even further. And we're able to track that much more easily using digital currency. So a PIP is that last unit at the very end. However far that goes, that last unit is where you count as 1 PIP. So at this point, as you can see here, right, 0.90265. So if a currency increases from 0.90265 and it goes up to 0.90267, that is a difference of 2 pips. See? Because we're at 265 and it goes up to 267. So what is the difference? It increased by 2 pips. If that goes up to 0.90300, that is an increase of 35 pips, right? The difference between 265 and 300 is 35. So it went up by 35 pips. Okay, so that's what pips are. So as you're making trades as you're investing in currencies, and of course, you know, the whole objective is you want to invest in a currency when it's at a lower price, and then you plan to sell it when it increases in price, right, by a certain number of pips. And likewise, if you feel that the value of a certain currency is going to drop, you want to sell it when it's higher, and then you buy back when it's lower. You make that money on what's called the margin. Okay, so that's, you know, that's a very simple way to put margin trading. So that is exactly what a pip is. I hope that you understand that. It's a unit of financial measurement. It's just money, but it's just broken down a lot further than what we can commonly see with our eyes. We only calculate down to 1 cent, but a pip can go much smaller than that. So that's how you calculate pips, guys. And stay tuned for some more videos. Let me know if you have any questions. Feel free to, if you're interested in opening a brokerage account, you can click on the link at the in the description of this video. Actually has a link where you can open up a Trader's Way account. And also, if you want to get started with iMarkets Live as well, you can go ahead and click on the link in the description of this video as well, and get started with this incredible Forex education, training and trading platform. All right, take care, guys.